Good morning, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm just Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The Banco Central now expects a deeper GDP contraction of 7 to 9% this year amid the health crisis. This is lower than the revised forecast of negative 4.4 to negative 6.6% growth given by the Development Budget Coordination Committee. Jocko says that the country is not out of the woods yet, but notes that the economy is now gradually picking up as it sees a growth of up to 7.5% for next year and 2022. He also points to early signs of recovery, such as a rebound in remittances and slower decline in exports and imports. Jokno also expects the recovery process to continue as more industries reopen following the relaxation of quarantine measures. For Finance Chief Sonny Dominguez, the government should further ease restrictions to revive the economy. Dominguez notes that the Philippines remains in a good financial position to finance its budget deficit and pursue a record spending plan in 2021. The country plunged into recession in the second quarter after registering a 16.5% GDP contraction. Meanwhile, NEDA Acting Chief Carl Kendrick Chua says poverty may, quote, temporarily climb to 17.5% this year, given the economic slowdown caused by the virus. But he remains optimistic that the government target of reducing poverty rate to 14% by 2022 is doable. And the CPI data for last month has just been released. Inflation eased to 2.3% in September from 2.4% in August on the back of easing prices in food and non-alcoholic beverages. The September CPI is close to the higher end of BSP's 1.8% to 2.6% forecast. A Bloomberg poll had yielded a median estimate of 2.3%. Slower food inflation in food items, including vegetables, chicken, and pork, contributed to the slowdown. Transportation inflation is also a major contributor to last month's CPI, hitting 8.3%. Average inflation for this year has reached 2.5%, still well within the BSP's 2 to 4% inflation target for the year. All right, Dan, so fresh inflation figures here. Let's see how investors, or at least how the market is going to react to that. But first, let's take a step back and see how markets over in the US performed overnight after President Trump is now back in the White House. What's the connection with market optimism and his health?
Apparently a lot, Jess. If you take a look at my terminal here, you're going to be seeing a big rally from Wall Street. The Dow Jones up by 1 7/10%, S&P 500, and take a look at the Nasdaq up by 2.3% on yesterday's trade. U.S. shares were actually closing at the highest level of the day on Monday. Now, this is amid optimism, as you mentioned, of President Donald Trump's health. He has left the hospital, and now he is actually back in the White House, going back to work. He's still, of course, under quarantine. So what is the connection, you ask? Well, this, according to Adam Phillips, he is from EP Wealth Advisors. Investors are likely running with the idea that the recent data plus President Trump's first-hand experience with COVID might increase the chances that there will be another fiscal stimulus package over in the US. So that's very personal. So his real experience with the virus might actually push him for these reforms. So recall that there were already talks. He had even tweeted from his hospital bedroom that more fiscal stimulus needed to be done. There's still this debate between the two sides, the Democrats and the Republicans. Another thing very interesting is that there's less than a month before the U.S. presidential election, and this has forced President Trump to actually scrap some rallies and campaigns. And in the polls in the U.S., there seemed to be now a clearer winner, according to some analysts, that it will be Biden. And this making it clearer and clearer that it's Biden is actually what has been stabilizing the markets. Very interesting, right? So if you take a quick peek at Asia, the idea should be that these effects should be spilling over to the rest of the region, or at least this positivity. It seems to be the case, at least over in Japan. You've got the Nikkei 225 up by 0.3%. However, over in China, market markets are still closed. They're still on holidays here. But again, the ones that are open, such as Taiwan and even the Kospi over in South Korea, are also enjoying some gains. Over in Singapore, you've got the FTSE Straits Times up by 0.5%. I'm also just gonna take a quick peek at our own local boards. You mentioned so many things to be digesting today. A lot of remarks from our finance secretary, and just in were these inflation figures. Let's take a quick peek at whether we are gaining. It does seem to be the case. We are up by 0.2% to 5948.91, but still we have not breached back those 6,000 levels. So this level was that one time actually where we finally hit above 6,000 in several weeks. In fact, yesterday we dropped down again. You can see that downward spiral here. Yesterday we were down by 1%, closing below 6,000. Now this, according to Phil Stocks, is Claire Alviar. It was the net selling, the foreign selling, and you can see that. I'm going to pull that out for you. 14 straight days of continued net foreign selling, dragging the index down, and this was also linked to the fact that investors continued to sell due to the health of President Donald Trump. Another thing that Luis Limlingan of Regina Cap is saying is that the U.S. reported a close to 8% drop, that's 7.9% drop in the unemployment rate in September, but that recovery is still slower than was anticipated. Nevertheless, there was actually better value turnovers yesterday. Quite a lot of trades, actually. 6.5 billion were trading hands. So I'm just going to take a quick peek at our sectors here. Now, according to some analysts over at Bloomberg, you've actually got a lot of investors looking at malls right now, especially the food stocks. It's now that the government has actually eased more restrictions on the malls. Even restaurants can now have 24-hour services. But you can see that properties are still down a touch. Those are, of course, our mall developers. It's down by 0.3%. Financials as well. So we'll be checking in on those again. I just want to take a quick peek at which stocks are moving, especially as we start a new trading day this morning. My terminal is being a little bit slow here. Let's just take a quick peek at that later on. But nevertheless, I did want to also highlight the fact that, a lot of those stocks have been sold out as of late. Recall that, Jollibee, Maxis, and Shakey's, these are food stocks that everyone has been waiting on whether they will be recovering. You can see in my terminal here who are the ones leading. You've actually got the property stocks, Robinson's Land, SMIC as well, which of course holds SM Prime, but not a lot of those mall stocks yet and consumption stocks as of late. You've got some those sitting out this rally. Pure Gold down by 0.5%, and Emperador as well down 0.7%. Now let's take a quick peek at the airline industry. Now this of course comes after more news that we have on PAL. We've already reported that before. That PAL is seeing to cut more jobs, but now it's actually official and clearer. So this was a statement that PAL had released on Monday evening. They will be cutting up to 35% of their workforce. So the first stage will be a voluntary separation, and they said they are doing this after so many things that they've tried. They first tried to adopt a skeletal workforce. They've then tried to cut down the salaries of the top executives so that they could save costs, and then they cut also their capital spending, and then of course there was infusion of money and liquidity from their owners. All of this efforts were proven to be not enough. That's what PAL said. Of course, collapse in travel demand, they say, have made retrenchment inevitable, Jess. And PAL is, of course, actually trading up by 0.1% this morning, Jess.
All right, really heartbreaking news, especially when you're talking about the pandemic, how really it eats up on employment there. And here's one company that also had to retrench some of its staff, but this time around, it seems as though there's a light on the horizon here. I'm talking about Abs-Cbn. You now have market speculators really zeroing in on the network's possible next steps and a possible return to free TV. Tell us more about that.
Just look at this chart naman, up by 71.43%.
Wow.
It's 12 pesos na. This was just 5 pesos just a few days ago, and had dropped
yesterday, I
even
think, at
below
9.
that. Yeah, exactly. So it's now 12 pesos. And like you said, it ain't over till it's over, right? But of course, this is still very much linked to, as you mentioned, speculators, linked to a rumor, basically, that this media company has signed a deal with a free television network. This is actually Zoe TV. I'm not sure if I'm
Mhm.
saying that correctly, but that's actually a free channel of Jesus is Lord Church, which is founded by Eddie Villanueva. So the rumor has been that they will be having a block time deal between Sky Cable, which of course ABS-CBN owns, it's an affiliate, and Zoe TV, and they will be showing some ABS-CBN shows on Zoe TV. So that was the what was fueling the rumors, the rally yesterday. That's according to Astro Del Castillo. Of course, ABS-CBN has now released a statement. They said they basically did not deny and they did not confirm. They just said they
Mhm.
will be disclosing any definitive initiative amid Zoe TV talk in due course when all of these things have been concretized. So again, a lot of analysts looking at this because basically, this according to Astro Del Castillo, who is at First Grade Holdings, attracting back the loyal viewers, and you have millions, and with them, these advertisers would be benefiting the company. Now, I just want to take out, the RSI chart of ABS-CBN here, if you let me, because what people are saying is that this is already overbought. So baka you missed out the rally na if you're just going to buy in today.
Mhm.
Sana kahapon mo pa binili. And you can see that on my charts here, in my terminal here, this red part of the graph, right? This means that it's already on overbought territory. So analysts are saying just be careful because it might be set for a pullback. But of course, very interesting times, as I mentioned, for ABS-CBN, and we'll be definitely watching out for that new disclosure once it comes. Now, moving over just from equities towards the digital economy, we've heard it time and again. The pandemic has bolstered, of course, the adoption of digital technology, but one study is pointing that the country's infrastructure remains constrained. What are they saying?
All right, so this one is coming from the World Bank and NEDA in their Philippine Digital Economy Report for 2020. And basically, we're right there, right on the spot there, Dan. And they're saying the holdup really here is really with the low high-speed broadband penetration here in the Philippines. In fact, if you try to take a look at the bigger picture here, it would show that the country, as expected, really is a laggard in neighboring mid-income countries when it comes to internet connection. That's despite having one of the most expensive in the world or in the region at that. In fact, if you try to take a look at the figures here, when we compare the Philippines to the rest of the average here, at least in ASEAN here, when it comes to download speeds for 3G and 4G, ours is only at 7 Mbps. Compare that to the rest of ASEAN at 13 Mbps. At the same time, when it comes to fixed broadband, we're only coming in at 26 Mbps. Compare that to the regional average of 59 Mbps. Also, when we're talking about coverage here, we remain to be very low at that. You have for 4G and LTE, only 72% of the population has that compared to the rest of ASEAN at 82%. And really, what's troubling here as well is for fixed broadband, with the sharing population only at 4%. Now, this is a phrase, this is a term that we've been hearing all throughout the pandemic, especially when we're talking about the return to classes and online learning, the term digital divide. Now, according to the study here, 60% of Filipino households actually have no internet access, especially in rural areas. And when they do have that connection, it remains expensive and to be of poor quality. At the same time, there's also unequal access to services via the internet. Now, we're talking about expenses here when it comes to connectivity here. For entry-level fixed broadband, that already comprises of 6.5% of the gross national income per capita. Compare that to the 2% threshold recommended actually by the United Broadband Commission. Now, also, let's talk about specific costs here. Handset-based mobile broadband in the Philippines would actually cost around $6 or roughly around 300 pesos per month for a 500 MB of prepaid. That's actually the fourth highest next to Singapore, Brunei, and Malaysia. Now, when it comes to fixed broadband plan, the cost actually coming in very close to how much it costs in Singapore and Thailand. And this is a very worrying considering that Thailand and Singapore actually have the fastest speeds in ASEAN. So if only ganun din kabilis yung speed natin, then maybe the cost at least for the fixed broadband plan might actually be worth it, right? So it's worrying considering that we represent around 105 million consumers in the global digital market. That refers, of course, to high internet usage here in the country. In fact, according to the study, the value added of our digital economy has increased steadily in double digits the past decade at an average of 13.3%. In fact, e-commerce as well has expanded by an average of 22.5%. And Filipinos, we are on the net most of the time. We spend 10 hours a day on the internet, according to the study. In fact, 4 hours of that on social media. That precisely is the highest in the world. For you, I guess, then that would be roughly around 5 to 6 hours.
Exactly. It's so surprising here that that is the amount, 10 hours per day, but then 60% of Filipinos do not have access to internet. It's very very difficult to reconcile. Nevertheless, Jess, this has been an issue of contention. Even President Duterte in his recent SONA had blasted internet for being very expensive and very slow. What can the country do to somehow propel this digital technology adoption?
All right, there are bright spots here, according to the World Bank. In fact, they're saying there's significant headroom for growth despite a low current state of digital technology here in the Philippines. And it all has to do with the proper infrastructure, the right policies and regulations. They say these things will actually go a long way. So, what do they suggest? They're saying lower the cost of logistics to somehow further accelerate e commerce expansion. At the same time, they want legal and regulatory constraints to be eased to open up to more foreign investments in the future. At the same time, streamline and simplify complex regulations, and at the same time, update outdated laws. And here's their challenge for the government. They are saying that authorities should actually set an example by fast tracking their e-governance projects. And that makes complete sense when you think about it. And now the Philippines, according to them, will realize its full potential if it ramps up digital adoption, making it more efficient and competitive, and making economic growth more inclusive for everyone, especially since we're in the digital economy. Connection really makes everything more inclusive.
Well, they're trying to do that now with the tower sharing, at least for LTE
Mhm.
connections, Jess. So let's see whether that can also happen for broadband connections.
Now, here are other headlines we're keeping our eyes on. Finance Chief Sunny Dominguez reminded local executives to prepare to absorb programs of the national government in 2 years' time. This is a Supreme Court ruling, and their expanded IRA share will take effect in 2022. Economic managers expect the SE's ruling on the Mandanas Garcia petition to cost the central government around 234 billion pesos, or almost 1% of the GDP. Recall that the ruling clarified that the IRA share of LGUs should be coming from all national collected taxes and not just from the BIR. Dominguez added that the huge increase in RIAs should help LGUs boost their economies and recover from the effects of the pandemic. In preparation for the new policy, the Development Budget Coordination Committee, or the DBCC, is looking to shift the implementation of projects worth over 404 billion pesos from the national government to the LGUs. Mergers and acquisitions that have been exempted from notifying the Philippine Competition Commission may still be reviewed after a year to check if they have substantially lessened competition. Under the Bayanihan to Recover as One Act, the competition watchdog issued guidelines that suspended the required notification and review of business mergers and acquisitions with transaction values below 50 billion pesos. The PCC initiated review of these transactions has also been suspended for a year. However, any transactions seen to substantially lessen competition can still be reviewed a year after the effectivity of Bayanihan 2. The competition watchdog likewise reminds parties to mergers and acquisitions with values below the 50 billion peso threshold may still voluntarily notify the PCC.
Meanwhile, Transportation Secretary Artugade wants a single reloadable payment card that can be used for all modes of transportation by December. He also floated the idea of getting more firms to offer cashless payment solutions to discourage monopolies. These proposals came after the DOTR suspended the mandatory use of beep cards on the EDSA busway yesterday when AF Payments, which is the company behind the brand, rejected Tugada's appeal to waive the costs of the cards. Now, after drawing criticisms, AFPI explains that they will not profit from the additional 80 pesos it charged for beep cards. The firm says the amount covers only part of the cost of logistics, production, initialization, printing, and distribution of such cards. AF Payments is a consortium of MPIC and Ayala that provides contactless payment solutions. Okay, guys, on the one hand, analysts have said that the fiscal response of the government is not enough. But on the other hand, the government has said we are actually in a strong fiscal position. So what's the game plan here, especially as COVID-19 deaths continue to rise here in the Philippines and the economy suffers repeated blows? Now, here to share with us his insights, we have with us RCBC's chief economist, Mike Ricafort. Good morning, Sir Mike.
Morning, Danie, and to all your
Good morning, sir.
Sir Mike, I just want to kick off with Secretary Sonny Dominguez's statements that we are still fiscally strong. This after the government had said, even before May, that we only had money until May for a lockdown, and then the quarantine has been extending way beyond this. Why are still so many businesses closing, poverty levels overshooting, despite the fact that we are supposed to have a lot of fiscal space still to be used? Why isn't this being used?
Well, actually, because the additional funding for any additional stimulus measures are already limited at this point, as may have been stated under the law. So it would require additional revenues. That's why it's already constrained. But nonetheless, the budget deficit to GDP ratio, the estimate is 9.6% this year. That may not necessarily reflect an outright increase in spending, but may also reflect the slowdown in tax revenue collections as a result of COVID-19. So those are the constraints right now. In fact, what's really well, because this is a once in a lifetime pandemic that caused an unprecedented shutdown, or at the same time, a lot of businesses sharply reducing production. Then also, I mean, the lockdowns. A lot of people who also stopped working, either temporarily, some of them in view of some of the business closures, permanent. Because this is part of economic cycles. There's always that attrition. Whenever there's a downturn in the economy, businesses tend to be nimble. They need to stay competitive. So as a result, they also cut jobs. Just like around the world, we have seen over the past couple of days, we have seen tens of thousands of jobs being cut, led by the likes of Disney, the airlines like American Airlines, United Airlines, and even some banks in the U.S. in the few hundreds of job losses. So that's a usual occurrence. But we all know that this pandemic is primarily health in nature. It's neither financial nor economic, because economies came from much stronger footing before this. In fact, that's one thing. Well, on the fiscal side, if you have to relate this, it's very important also to maintain that to have this balancing act of maintaining fiscal discipline at the same time, especially in managing the budget deficits as well as the overall debt level. So far, the country's debt levels are still considered relatively lower compared to similarly rated countries, because even of all times, the Philippine credit rating was upgraded by Japan Credit Rating Agency last June 11. Well, of all times, at the height of the COVID-19 pandemic or the lockdowns, whereas many other countries around the world, about more than around 80 to 100 of them were downgraded because of COVID-19. So it's very important to also maintain, to manage that delicate balance. But that's on the fiscal side. That's why there's a need for further of course, greater support also on the monetary side. We've seen
Mhm.
record low interest rates. We have one of the biggest cuts in policy rates among
Mhm.
relatively larger countries. That's why we have seen
Mhm.
our the well record low interest rates, the policy rate at 2.25. At least inflation is already much closer to it at 2.3. That
Okay,
would
so
make it
Sir
more
Mike,
sustainable.
what does that say about the government's response here, at least in with the pandemic? Given, of course, the context of just recently you have the president's approval and confidence rating really surging here. 9 out of 10 Filipinos are basically approving of the president's performance amid the pandemic. So, what does that say about the government's response?
Yeah, I think we have seen the communications practically every day. Every noontime, we always see the press briefings straight from Malacanang. If there are weekly briefings, just like the one that we had straight from the president last night, there are reiterations, more details on a daily basis, uh, every noon, and that is also communicated. That has been widely communicated also as to what the government needs to do, all the programs, all also the priorities when it comes to managing COVID-19. Uh, that only shows also that well, it's also very important to manage a number of new COVID cases. Although it has already improved quite a bit, around 2,000 levels from it used to be 3,000 levels for the past 2 to 3 weeks, but now it's hovering somewhere between 2,000 to a little less than 3,000. So at least it's being managed. At least the economy is slowly opening also. Uh,
Mhm.
and it's also being
Sir,
clearly
sir, I just
communicated.
have to
Yeah.
interrupt you, sir. Sir, I just wanted to ask, sir, you're saying, sir, that they've been doing a good job. The cases are in fact going lower, at least in September, even as the deaths are still rising. Sir, does that mean that consumption will be picking up towards the end of the year? And if so, what's your expectation now on growth? Are we able to reverse the contractions that we've seen in the first 2 quarters of the year with the expectation that there might be higher remittances coming in, and there might be, as you mentioned, increased confidence to go out and to continue spending?
Well, for now, Danny, what would going forward? What would really? Well, this is an exciting quarter because we're moving into the Christmas season. Christmas has to go on, and at the same time, consumer spending would also would likely pick up towards the Christmas season, and that would include remittances as well, consumer spending, which accounts for at least 70% of the economy, and also a boost to services, which accounts for at least 60% of the economy. First, uh, hopefully before the end of the month, if MGCQ is uh, well, if that is set in Metro Manila, further relaxation from GCQ right now, so that's gonna help further open the economy, and that would be a boost also to our markets. That's one of the greatest leads right now, because
Mhm.
if we further reopen the economy, that's gonna really help solve a lot of problems. It's gonna create a lot of jobs, more businesses
Sir
will.
Mike, moving
Go
forward,
ahead, Jessica.
one thing that authorities are looking into to at least help propel the recovery, especially when it comes to LGUs, is this new SC ruling stating that 40% of all national tax collections should actually go to LGUs. But at the same time, you caveat this by thinking, is this going to put at least the national government in a deficit here? So, what's your take on this SC ruling, sir?
Well, at least right now, it's what's really important is to push the economy from the national level and up to the local and grassroots level. So for as long as that the funds are dispersed properly, and now it's kind of challenging to be, uh, especially for officials on the local level, because they need to they've been spending since the lockdowns started in March, in providing also, starting with the social amelioration, some of the assistance programs, and so on to assist also those who were, uh, some of the laid off workers, and some of the repatriated workers, as well as, of course, all those facilities that they need to put up, and all the livelihood programs that they may have to deploy, enable to provide assistance for those those who were furloughed. So, well, as well, well, I think for as long as it's gonna further help the economic recovery program, especially now that elections are less than 2 years away. Preparations for the elections would be, we will see that about 6 to 9 months prior to the election. So by the second half of next year, we'll be seeing a lot of actions in terms of increased infrastructure spending, as well as the government projects that need to be completed prior to the elections, prior to the election ban that may take place. That's gonna, well, coincidentally, the election year would help the recovery story as well. Infrastructure spending is very important because because of the high multiplier effect. On top of the stimulus measures, on top of Bayanihan 2, the other monetary easing measures.
So lots of spending at least to be expected come 2021 and 2022 to at least help boost recovery.
Yeah,
Thank you,
right.
Sir Mike. As you mentioned, it's not a matter of, who has the money, but whether this money is well spent by the people that are responsible for it. So thank you so much. That was, of course, Mike Ricafort, Chief Economist of RCBC. Thank you, sir, for joining us this morning.
Thank you so much, Danie and Jester. All your viewers. Stay safe.
Thank you, sir. And that's the first look into the business day. Today is October 6, 2020. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Delos Santos. We are One News.